Great. So it will be good for me to do this question from top to the very last thing, including what a reconciliation. All right. All right. So we are doing December 2024, question number 2B. December 2024, question number 2, boy. So December 2024, question number 2, boy, we are told the following information relates to the unit manufacturing cost of product TM made by Timua Limited. Additional information, the budgeted fixed production is 4.2 million for a whole year. For a normal production of how many units here? 140,000. Budgeted selling and admin overheads are 2.8 million per annum. The budgeted fixed costs are incurred evenly during the year. There are 2 periods in a year, each of 6 months. During the last financial year, the following results were achieved. So we are told here there were no opening inventory at the beginning of the year. Yeah. Number 7, fixed production cost and selling and administrative costs incurred during the year were equal to the budget. Required, prepare a profit or loss statement for each of the 2 periods using each of the following presentation methods. So very fast, remember the very first thing before I start doing any P and L marginal costing, P and L absorption costing, first of all, I must come up with what we call the cost what here? The cost cards. So first here, come and give me the cost what here? Give me the cost cards. Give me the cost cards. Great. So cost cards. So for the cost cards, this is what I want you to do for me. So for the cost cards, ladies and gentlemen, this is what I want you to do for me. You will give me the marginal cost card. You will give me the marginal cost card. Yeah. You will give me the marginal cost card. Yeah. So we have here. Where is it misbehaving? Okay. So you'll come here and give me, no, share first. Yes, come and give me the cost card. So cost card. So the cost card, what do we have here as our cost card? Great. So we have here cost card. So cost card, marginal costs. So what are you able to remember about marginal cost, my students? Marginal cost, we are only factoring in which kind of costs? Variable. So only variable production cost. So give us the variable, production cost per unit. That is the marginal. Don't bring in issues to do with variable selling price. No, we only want variable production cost per what year? Per unit. And as this examiner given us that cost, oh yes, he has done that. If you look at the question we are given here, ladies and gentlemen, what have they given us here? They have given us here, if you look at this very well, this is quite a tough thing, we shall overcome. Yeah. So if you look at this particular question, question number 5, they are telling us something very nice here. Not question 5, not part 5 here, but at the very beginning. At the very beginning, you can see they have given us what here? Somebody variable production cost. And there is a misalignment here from your past papers. What are you able to see as the variable production cost? What is the variable production cost given from the past papers? It is 120, isn't it? It's 120. So the variable production cost is 120. The variable production cost here is 120. Why is it not doing exactly what I want it to do? Yeah, so variable production cost in this case is 120. So we have here 120 So, you know, like the one that we did yesterday, it had direct material cost, direct labor cost, and then we have variable production overhead. Here they have given us just one figure. They are good examiners. They have given us here the variable production cost per watt year per unit. Ordinarily, I would have looked for direct watt year somebody, materials plus direct watt year somebody, labor plus watt year somebody, variable production overheads. But you see, this examiner was a nice examiner. He gave us the variable production cost per who? Per unit. So this one is over. Cost card, marginal costs, done. Then come here and give me the same cost card. Give me the same cost card. Yeah. But this time around, in this case, you're using what we call absorption cost. So under absorption cost, what are you able to remember, my friends? We take both the variable production costs and what here somebody? The fixed production cost. Fixed production cost. So we start with the variable production cost. So we write here variable production cost. So the variable production cost, how much do we have here? This has already been given to us as what here somebody? 120. So come and include the fixed production cost here. The fixed production cost. The fixed production cost. So for fixed production cost, what has this examiner told me? For fixed production cost, ladies and gentlemen, what this examiner has told me is this. What this examiner has told me is this. So for fixed production overhead, I hope you are able to see here, fixed production overhead. What have they told us? Fixed production cost. Look at note number 1. Remember, fixed expenses, because they're periodical, in most cases, they must be absorbed. They must be absorbed. So we must compute what we call OAR. OAR stands for what here? Somebody overhead absorption rate. You can see they are not here because here we have variable selling. They are not on this table. When I come to note 1, additional information 1, they have told me the budgeted fixed production cost is how much? 4.2 million for a whole year, isn't it? And as we want to absorb this to each unit. So the budgeted fixed production cost is 4.2 million per annum for a normal production of how much here, somebody? 140,000. So then I should be able to get that fixed production overhead per unit. So then how do I do this? So to get this fixed production overhead per unit, we are going to use the OAR principle. So we shall use, in this case here, the OAR principle here. So we are using the OAR. This is overhead absorption, what here, somebody? Rate. And how do we do this? We shall take the budgeted fixed overheads for a whole year, isn't it? Divided by what here, somebody? Budgeted units or normal units or expected units. So for a whole year, I can see a figure of 4.2 million. For a whole year, I can see a figure of 4.2 million. And for the whole year, I can see how many units are being produced. 140,000. For a whole year, we are producing 140,000. So when you take this 4.2 divided by 140,000, what figure are we getting, somebody here? 30. So in that case here, when you come and add this 30 here, you're going to end up giving us what here, somebody? 150. So basically, this is the full cost per unit here, using what we call ABS, using absorption costing method. So that is the first step that you ought to have done in this particular question. The moment you have done this, then you can never go wrong. Remember, in most cases, they will not give you this total variable production cost. If they don't want, or rather if they don't give you this variable production cost, then to get this ABS absorption cost, what do? We would have taken, in this case here, ordinarily, direct materials plus what? I'm alone. Direct labor, right? Plus what here, somebody? Variable production overheads, and then plus fixed production overheads, or plus fixed production cost. That's how we did this in our yesterday's class. Was it yesterday or the day before yesterday? I can't even remember very well. So at least this is over. So then what we need to do, ladies and gentlemen, is to come here and go, straight away. Let's now get into business. Which business are we doing here? We are onto the business of now giving them the profit and loss statements. So we shall do profit and loss statement, profit and the loss statement. First of all, we start, we are doing number one, isn't it? So we start with which method here, somebody? Marginal costs. We start with marginal costs. We start with marginal costs. We start with marginal costs. Madam, I think you're lost. You're in the advanced level. Oh, I'm the one who is promoting you, eh? Great. It shall be like that next time. So we start with a profit and loss statement. So we have two periods. We have here period what here, somebody? Period 1. And the period what here, somebody? And the period 2, yes. So we have period 1 and the period 2, yes. Period 1 and the period 2, yes. Period 1 and period 2. So remember, it is a normal profit and loss statement. We shall always begin with our sales revenue. So give us the sales revenue. Sales. Now, ladies and gentlemen, how do we normally get sales? How do we normally get sales? Please help Mwalimu. How do we normally get sales? Yeah, selling price multiplied by what here, somebody? Quantities, yes. So come and give us sales. And we are saying here that sales will be price times who? Quantity. So for the two periods, do we know how many units you are going to sell? There is one step you have skipped. You have skipped a step. Is there somebody who is able to remind us the step you have skipped? The stock movement schedule. You have skipped the stock movement schedule. And with your permission then, I will be able straight away here. I'll be able straight away to come here and first of all make that schedule for ourselves. So come here, give us the stock movement, schedule. The stock movement schedule. So remember, how many periods do we have here? Remember, we have two periods here. We have two periods here. The two periods, we have here period 1, and then we have period what here, somebody? Period 2, like that. So for each of these periods, I want you to give me the opening stock. I want you to give me the production. I want you to tell me the units we sold. Yeah, the sold units. And then I want you to give me what here, somebody? Closing like that. So opening, production, sales, and the closing. Fortunately, this great examiner gave us this in the question. So if you go back to the question, you will be able to see where the examiner has given us these inventory movements. He told us in note number 5, during the latest financial year, the following results were achieved. So you can see if it is production period 1, we produced how many? 75,000. How about period 2? 65,000. So come right away here, ladies and gentlemen. Come, ladies and gentlemen, here right away. We have, so we have in this case here production. So production, please remind me, period 1, you told me we produced how many units here, production? 75,000. Thank you so much. How about production in period 2? 65,000. Are you able to see the units we sold in the respective periods? Are you sure? We sold, in this case, if you look at the sales units, period 1 we sold 60 and period 2, 70,000. So period 1 we sold 60. Period 1 we sold 60. So sales, period 1 we sold 60,000. How about period 2? 70,000. Now from these, we can easily get to know the stock movements. Remember, not unless you're told otherwise, period 1 is when we are commencing our production, and we normally begin our production with how many units of stock in the opening place here. Opening stock period 1 is always 0, isn't it? So you can see in period 1, we started with 0, but we were lucky to produce 75,000. Yeah, 75,000. So the goods available for sale were 75,000. And we ended up selling how many units here, somebody? 60. So then the closing will be how many? 15,000. So this closing of 15,000 in period 1 becomes the opening in period what here, somebody? Period 2. So the opening in period 2 is 15,000. So please look at period 2. Goods available for sale. They're coming to how much here, somebody? They're 80, isn't it? 80. Yeah, because it is 15,000 plus 65,000, which gives me 80,000. And we managed to sell how many at the end of the day? 70. So in that case here, what do we have here, somebody? We have 10,000. You're right. Thank you so much. So at least now this has been settled. And once you settle this, you are halfway. Because like now in our income statement, we are trying to get the sales in Kenya shillings. So how do we get these sales in Kenya shillings, my friends? It's very easy. This is our, you've just told me that sales equals price times what here, somebody? Quantity. Have they given me the selling price? How much is the selling price per unit? 200, right? So they're telling me that Mwalimu, the selling price is 200. They're telling me that the selling price is 200. If you look at these notes, have they given us, you can see here the following information relates to the unit, 1 unit, manufacturing costs of product TM made by Timua. And you can see the selling price given is how much? 200. The selling price given there is 200. Now, ladies and gentlemen, this is where we are. So you're saying that this one here, I can talk of price times quantity or quantity times price. Are you able to see the sold quantities? Yeah, so the sold quantities are here, my friends. Units in this case that we're going to sell, you can see in period 1, there are 60,000 and what here, somebody? And 70,000, yes. 60,000 and 70,000. Very nice. Yeah. Aha. Okay. So we have here, no, today it won't let me down. Today I must be very good at this. We shall overcome. So this is on. I can calm down. We have to call these people. You are my teachers in the last class. Go slowly. Allah. And I've used it during the day. No. International disaster. So let me see whether this now will work. Slowly. Not working. Let me call this guy. Perfect. Now let's continue. So we have here, we know, I share the screen. Yes. So that they can get to see from their side, isn't it? Or this problem comes when I'm sharing the screen. We shall overcome. All right. Okay. Okay, great. So we know the number of units you're going to sell in period 1 and period what here, somebody? Period 2. Great. So then very fast, ladies and gentlemen. We are selling how many units here? They have told me to ensure that I'm moving this. Now it's working. So sales, period 1 is 60,000, period 2, 70,000, isn't it? So then, ladies and gentlemen, this is what I have here. So period 1, they have told me it is 60,000. 60,000. How about period 2? 70,000. So comma there, 70,000. And fortunately, we know the price per unit, isn't it? So price per unit is 200. Price per unit is 200. So am I able to get the sales revenue for period 1? It will be 60,000 times 200, which give you guys what figure here? 12 million. 12 million. So this is 12 million. 12 million. How about sales for period 2? I know each unit in the 2 periods, each unit will be going for 200, and I'm going to sell 70,000. So 70,000 times 200 gives me what figure? 14 million. Thank you so much. 14 million. 14 million. Now, ladies and gentlemen, having gotten the sales, what now I need to do is to come and subtract what your cost of sales. So come here and less cost of, there is somebody again doing something on the other side. There is something doing something on the other side. There are many problems. There are many problems in this world, right? There are many problems. Disable annotation for others. There are many problems in this world. Okay. So then we come under less, in this case here, cost of sales. So less cost of sales. But remember, which cost of sales are we deducting here? The marginal ones, isn't it? The marginal cost of sales. So mention here marginal cost of sales. Marginal cost of sales. So we are lessing cost of sales. Specifically, we are subtracting the marginal cost of sales. Whenever they talk of cost of sales, what comes to our mind, my good students? Opening stock plus purchases? No, we are not. We are a manufacturing firm. Production, isn't it? And then we less closing inventory. So we start with opening. Let's start with opening here. Opening stock. So are you able to see the opening stock units? Opening stock units, ladies and gentlemen, that I'm able to see here. Which ones am I able to see here? Opening stock. It is 0 and what here, somebody? 15,000. So it is 0 here. It is 0 here. It is 0 here and 15,000 for period 2. And do we know the stock valuation cost, the marginal one? 150. 120 was the marginal one. ABS absorption is the one that is 150. So this one we had already obtained this, ladies and gentlemen. And if I remember very well, we had in this case here this. Nope. We had in this case here this figure somewhere. If you remember, we had done our cost cards. And the marginal cost cut, we had the variable production cost per unit, which is our marginal production cost per unit of 100 what here? 20. And then we have the absorption cost per unit, which is 150. And these are the unit cost, which shall be using to value our inventories. So we continue, ladies and gentlemen. Remember this time round, we are using marginal. So I'm picking the marginal cost per unit, which is what here, somebody? Which is 120. So when I write 0,150, 0 is for period 1, and 1, or rather 15 is for period what here, somebody? 2. So then 0 times 120 for period 1 gives me opening stock of what here, somebody? 0. How about 15,000 times 120? 1.8 million, like that. So this one here we have 1.8 million. This one here we have 1.8 million, like that. Now, ladies and gentlemen, having in this case here, having in this case here written down the opening stock, we know that the next thing will be for us to come and add what here? Production. So come here and add production. Add production. So do we know the number of units that we produced? Number of units we produced, yes, we can see them here. They are 75,000 and what here, somebody? 65,000 respectively. They are 75,000 and 65,000 respectively. Remember, what you produce is part of your inventory. Yeah, it is still there. You can never add product or other profits on this. So because we are still valuing this using marginal, each unit here still will be valued at how much here, somebody? At 120 years. So remember, the first one will be for period 1. So 75,000 times what here, somebody? 120,000, which will end up giving me what figure? 9 million, which will end up giving me 9 million. Which will end up giving me 9 million. And then for period 2, we have 65,000 times 120, which will end up giving me what figure? 7.8 million. 7.8 million. Thank you so much. From this, we shall straight away go under less what here? Closing stock, isn't it? So come here under less closing stock. We less closing stock. So closing stock, are you able to see the closing stock units here, somebody? 15,000 and what here? 10,000, isn't it? So we have here 15,000 and 10,000, like that. So, and we know it's still a stock item, which are being valued at how much here, somebody? At 120. So 15,000 times 120 gives me the value for period 1, which gives me what figure? 1.8 million. 1.8 million. And then we have now 10,000 times 120, which gives me 1.2 million, isn't it? So this gives me 1.2 million, like that. Remember, closing stock is always done what here, somebody? Subtracted at this cost level. You subtract. So then come and combine the 3 elements. Combine these 3 elements. Combine these 3 elements. Combine these 3 elements, ladies and gentlemen. Combine these 3 elements. Yeah, to give me the marginal cost of sales. Combine those 3 elements. Combine those 3 elements to give me, ladies and gentlemen, to give me, ladies and gentlemen, to give me, ladies and gentlemen, the cost of sales. So give me here cost of sales. So what I want you to do for me is to take 0 plus 9 million minus 1.8 million, give me a figure to write. 7.2 million. 7.2 million. How about the second period? 8.4 million. So here we have 8.4 million, like that. I know you are good now with this. You must be very good with what here? With this stock movement. Now, having gotten this cost of sales, what are we going to do with this cost of sales, my friends? William alone. We less it from who? From sales. We less it from sales. And once we less it from sales, what figure, the figures are going to get, what name shall we give them? Gross contribution. You are very good. We shall give them a name called gross contribution. Gross contribution. I don't want to rub this stock movement schedule. What I will do, I will come here and skip this a little bit because I know you will be able to guide me. You will be able to guide me. That much I know. You shall be able to guide Mwalim. Yeah. So I can continue here. And what I would want to do, just to try. All right. Let me see whether this will accept. That is, no, this one here is a rubber. It can't rub what this guy wrote, eh? There's a guy who wrote my board. That must be a wizard in terms of IT, isn't it? Yeah, no worries. So then we have, ladies and gentlemen, we have in this case here, period 1. I just want to continue. Don't rub yours. You're continuing with your statement. We have here period 2. Yeah. So I want you to give me the gross contribution. Yeah. So you're taking sales minus 7.2, isn't it? The first one, somebody is giving me a figure of 4.8 million. Thank you. How about gross contribution for period 2? 5.6 million. 5.6 million. So then having gotten a gross contribution, my objective is to get net contribution. So what will I deduct from this to get net contribution? Variable selling, not just cost. Because variable selling, yes. So less variable selling costs. And are you able to see them? The variable selling cost, I can easily get them because the examiner has given them to me. If I come to the question here, ladies and gentlemen, let me see whether I'll be able to see the variable selling. Oh, yes, although mine is distorted a little bit, but I know this 120 is variable production cost, and then the variable selling is how much here? Somebody is 10. But now remember that 10 is for each unit. 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 So meaning that I must be able to look for the units that we did what here to multiply with 10. The units which we sold. The units that we sold here. So we sold, I can see the period 1 sales were 60,000. 60,000. Period 2 sales were what here, somebody? 70,000. And then I'll be able to come here and multiply this with what here? With 10. Which then gives me what figure, ladies and gentlemen, here? The first period is 600,000. So we have here 600,000. The second period, 700,000. 700,000. So you less this comfortably, then you will be able to get what we call now the net who? What we call the net who? The net contribution. What we call the net contribution. So the net contribution, somebody give me, it will be gross minus variable selling. The first one is 4.2 million. The first is 4.2 million. And then the second one will be 5.6 minus 700. 4.9 million, isn't it? 4.9 million. 4.9 million. Now from this, having gotten the net contribution, what do you think will be the next step for us? We less all fixed costs. Starting with fixed production, yes. And then a fixed, and any other, if they tell you there is fixed administration, you deduct it at this juncture. So we less fixed costs. So less fixed costs. So we start with fixed what here, somebody? Fixed selling, isn't it? Yeah, we start with fixed selling. No, it's fixed production. Start with fixed production. Fixed production. So fixed production cost, are you able to see them somewhere? From note number 1, what have they told us is the fixed production amount? 4.2. But you see that is for a whole year. And how many periods do we have in this whole year? There are 2. So remember this marginal costing we don't absorb. We work with periodic costs. Hello. There is one here that has disturbed me now. We are becoming ninjas very soon. Even you cannot. Even you cannot. So imeandikwa na mtu ako pande ile. Bring everything, even rulers we try. No worries. Let's continue. Thank you so much. No, I'm okay. Thank you so much. All right. Thanks for trying. Yeah. All right. So then we have here fixed production. We are told in the question from note number 1, we can see that the budgeted fixed production cost were 4.2 million for a whole year, right? Yeah, remember marginal costing, we take them periodically. But you see, we have 2 periods, and each period has got how many months? 6 months. So we have to apportion the 4.2 into 2 periods. Yeah, so then each period will be how much? 2.1, isn't it? So yeah, right. 2.1. 2.1. So here we have 2.1 in period 1. And then we have here 2.1. Like that. Great. Do we have any other fixed cost apart from fixed production? We have fixed selling, Do we have the total amount for whole year? How much? 2.8. 2.8. So then we have here fixed per annum, isn't it? So then fixed selling for first period, which is 6 months, will be 1.4 million. So then come and, do we have any other thing really? No. So come and give us net what here, somebody? Net profit here. So it's only one student who did their homework, him alone. Were you able to get everything up to here? There is also another student who tried. You did both absorption and only marginal, but at least you did something, right? Great. So what is the net profit? You take net contribution minus the first one I'm being told is 700,000. The second one, 1.4 million. 1.4 million, like that. So that is the end of what year? That is the end of our marginal costing statement, profit and loss. All right. So once I'm through with that, then I'll be able to go to the P&L. Now using this time round what year ABS? ABS is absorption, isn't it? Are they ready for that one? Are they ready? Are they ready? We do it. Ah, great, great. And then I'll give you another secret. I don't know whether you guys have realized that I normally follow the same approach. The approach that I used last semester is the same approach I'm using, even this semester. And I have all those videos in the learning management system. Have you realized that? Yeah. Have you seen all of my videos for last semester covering the entire syllabus? So like now what you need to do is to go to the learning management system and go to, I'll be able to demonstrate here. Just watch those videos before we come here. You love this subject a lot. You love this subject a lot. This subject will become a darling to you. All right. It will make you do all our homeworks. And then the other good thing with videos, you see, unlike Mwalimu here, I can only talk at my normal speed, which is 100%. But you know a video can do this video up to a speed of 200%. Do you know how to do it? I'll show you how to do it. You don't have to watch your videos at 1. You can watch them at a speed of 1.25, 1.5. The very best speed is how many? Twice, yes, twice. So if a video is 1 hour, if you watch it at a speed of 2, you cut 50% of the time. But of course, when you're not able to follow, what do? You slow down, Yeah, but if it's something simple like now, this marginal, you simply pop, like that. When you're not able to comprehend, you pause. And then we finish the syllabus pretty fast. Great. So we go straight away to P&L. P&L, this time round, we're using what here? Somebody absorb? Absorption. Great. So this time around, we are using absorption. So even if you understand nothing, you come and write a big title there. Say profit and loss. And then you say what in capital letters? Absorption, yes. Absorption, yes. Absorption, yes. You don't have to write in full. That way the examiner will still understand. So remember, you have got 2 periods. You have period 1, and then you have period what year? Period 2. Period 1 and period 2, like that. So we shall begin with, as normal, this is a profit and loss account, where we begin with what you say? Sales. For the online participants, I would want to know whether you are able to follow. Online participants in the chats, could you kindly mention there whether you are able to follow or not? You can simply, if you are able to follow, say Y for yes. If you are able to follow, mention there Y for yes. Y for yes. If you are able to follow very well, you say Y for yes. If you're able to follow like 50%, you simply say ish. Yeah, so let's see the chat here. Great. Ronald, great. Thank you so much. Thank you so much. That is why I like inviting you to this class. Thank you very much. So we continue now. We start with our sales figure. So we have here the sales figure. So how do we get our sales, my good students? To get sales, you told me we take quantity times what your price? Or price times quantity. Do we have those quantities that we sold in our stock movement schedule? Period 1, how many units? 65,000. 60,000, 60,000. How about period 2? 70,000. Thank you so much. But do we know the selling price per unit? How much? 150 is the selling price per unit. Yeah, remember the 150 is cost. 200, the selling price is always the same regardless of the statement. 200. 200. So remember, for first figure is for period 1, isn't it? Second figure is for period 2. So period 1, 60,000 times 200 gives us how much? 12 million. So this gives us 12 million. Yeah. And then 70,000 times 200? 14 million. 14. And we are very, very fair in marking. Whenever it comes to CASNEB examinations, marking of CASNEB papers, we are very, very fair. You'll be surprised. This will be a mark and this will be a mark. Even if you got the same marks in the marginal statement. These are different statements. So a mark, a mark. Anytime you get yourself getting a fail in any CASNEB paper, just get to know that you got less than 20%. Yeah. Otherwise, if you are a very, very sharp student, like in this MA, you get your own 20 marks. Chances are you will pass. Are there papers you have ever done at the lower level and you thought, hey, this one I will fail. But when the exam results came out, you got yourself passing? Yeah, it happened severally. Like which paper? Audit. Yeah, you did it and thought this one for sure I'm going to fail. But when results came out, pass. Yeah, it's because we are very, very fair markers. Very, very fair markers. There is no examiner in CASNEB who is a sadist. What we have always seen students doing, and this is the biggest mistake, you see, like now this is a format solution. Just laying down the pro forma format, picking a few figures here and multiplying, you'll end up getting so many marks without even knowing what you are doing. So long as you are courageous. What disturbs many CASNEB students, which makes most of them really fail these papers miserably, is because most of them are cowards. Cowards, yeah. So I'll bring a paper. I don't know whether it is a color. I give this gentleman, during the exam time, I give this gentleman a blue paper. So once I place the paper on his desk, after 2-3 minutes, we will always get all his pens. And I don't know why they like carrying so many pens to the exam room. So like 5 pens at once. So I go and collect these pens for him. Again, after a few minutes, I get to see his calculator down. So after a few minutes, you start seeing this guy sweating from where? The forehead. Kikuyu wanaita 𝗲𝗍𝗍𝗶. Hapa mbele hapa. So I normally call them outside and try to cancel them. Fortunately, I only teach evening students. Yeah. So these evening students are mature still. So if he's a gentleman, I'll come and ask this gentleman, is it a must that you have to pass? Is it a must? Is there anything like a must in this world? No. Even if you fail, so what? See, life will go on. Yeah, life will go on. That is life, isn't it? So I'll always cancel them. Kwa nani amekuwekea pressure ama ni mama kwa nyumba amesema ukianguka usirudi kwa nyumba? Because these CASNEB exams, trust you me, you can only get to pass them when you are what year? Very cool at them. Yeah, you're looking at question number 1. You know, question number 1, we shall always make it very hard. You read a management accounting question, you wonder whether it's MA or biology, isn't it? Yeah. So question number 1 ya kushtua. So ukiwa mwongo ukianza kutoa jasho, utaweza kuona kama question 2, 3 and 4 are easy questions. So you shall always be very courageous when doing CASNEB exams. Very courageous. Very, very courageous. All right. So let's move on, and of course you will have to pass. You must pass, yeah. Usianze kusema ati it's not a must I pass now. No. Nitakwambia siku natumia. For now we know that passing is a must. Is a must. So come here and you less what here somebody. We less cost of, and this time round we are taking the absorption. This time round we are taking the absorption. So cost of sales, we begin with what here? Opening stock. So cost of sales, we begin with opening stock. So the online students, are you able to remember our opening stocks? Online students, are you able to remember them from our stock movement schedule? The online students, I want to see whether they're able to remember them. Period 1, how many? We have 0. Physical students have told me already. So 0. How about period 2? 15,000. But my good students, remember these are units. We want to convert this to money. Yeah. And to convert this to money this time around, we are using absorption cost, which is 100 and what here? 50, which is 150. Remember, there is a difference between marginal cost that was 120 and absorption cost, which is 150 per unit. So then the first one will be 0, isn't it? 0. And then the second one will be 15,000 times 150. 2250,000. 2250,000. Thank you so much. Now from there, my good students, I will come and add what here? We add production. Add production. So production, you must remember the production units in the two periods. Are you able to remember them? Or you did both of them in your assignment, both marginal. You must be very good. That's very good. So production units, how many are they? 75,000. 75,000 vis-a-vis what here, somebody? 65,000. And then, of course, we are multiplying them with what here? With 150, isn't it? With 150, yes. So do you have the figures for period 1? 75,000 times 150 gives us what figure? 11,250. And then we have 65. Actually, this is 65, right? Sorry for that. This is supposed to be 65. This is supposed to be 65. Rabbi is here. 65,000. 65,000. 65,000. Which will end up giving me what figure here, ladies and gentlemen? 97. 50,000. 50,000. Like that. 50,000 like that. And then we come under less who? Less closing stock. Less closing stock. So we must then be able to know the closing stock units, isn't it? Closing stock units, do you remember them? For period 1? 15,000, isn't it? So period 1, we have 15,000. Period 2, 10,000. So each unit to be valued at 100 and what year? 50. Each unit to be valued at 150. So 15,000 times 150, that will give me what figure? 2250. 2250. 2250,000. And then we have 10,000 times 150. 1,500,000. Okay. The same, isn't it? All right. So then you come and subtract. Of course, you are subtracting this. Don't forget, ladies and gentlemen. God is good. Now I'm the one who is even able to change colors. See this. Great. Let me try another one now. So, of course, whatever I will be getting here will be called cost of what here, somebody? Cost of sales. They are not marginal, eh? These are total. They are full costs. So we have here 0 plus this minus this. 9 million exactly. 9 million. 9 million. Thank you so much. How about this cost of sales here? 2250 plus 10,500. So we have 10,500,000. So please go ahead and subtract. Go ahead and subtract the cost of sales from your sales figures to give me, in this case here, figures that I shall call gross profit, not contribution, isn't it? The contribution approach is only applicable under marginal costing. So we call this one gross who? Gross profit. We call this one gross profit. Gross profit. So gross profit, it is 12 million minus 9 million. 3 million. 3 million. 3 million. And then we have in this case here 14 million minus 1050. 3.5 million. So this is 3.5 million. So we shall stop here briefly because of the Muslim Maghrib prayers. They are very, very important at this juncture because it's also the time they break their fast. Yeah, so we shall take how many minutes? 10 minutes. Yeah, it's good to break the fast. Na kama muko na dates wanapatia. Napenda tenda sana. So can we come around marking? Are you okay? Let's see. The online guys, are they still here with us? Yeah, 21. Great. Thank you. So now we can continue. So having gotten gross profit, what will be the next step? We less non-production. Yeah. So we less other costs. We less other costs. What the brother is calling non-production. So when you hear non-production, because I know your examiner would want to confuse you quite a lot, non-production costs are those costs that we incur post-production. Post-production, like selling, distribution, administration. You look for them, whether variable or fixed, we lump them all here together. So were you able to identify those non-production costs? Which ones are those? We have variable selling. So we have here variable selling. Variable selling costs. So remember, which quantities are we going to use here? The sold units, isn't it? Do we know the number of units we sold in period one? How many? 6,000. 60,000. And then 70,000. And do we know the variable selling cost per unit? How much? 10. So then this one here will end up giving me 1.600 there. So 600,000, 700,000, 700,000. Yeah. Do we have any other non-production cost? Fixed selling. So we have here fixed selling. So fixed selling, have they given us the fixed selling cost for a whole year? How much? 2.8. So you divide by 2, which gives us what here, somebody? 1.4 million. 1.4 million. Is there any other non-production cost here? No, isn't it? So you'll be able to come and subtract for you to give us what we call what here? Yeah, profit before. Thank you so much. Yeah. So just tell me here that we have here profit before overhead adjustment, to simplify language. Before overhead adjustment. So you have the gross profit of 3 million minus 600,000 minus 1.4 million, which gives us what figure? 1 million. How about this one here? 1.4 million. Thank you. So from there now we'll be able to come and capture what we call over stroke under absorbed overhead, isn't it? So we have here over stroke under absorbed overhead. And remember, it's not just any overhead, but production. So we start with period one. So remember, we normally absorb overheads to what here, somebody? Units that we produce. Do we know how many units we produced in period one? How many? 75,000. Are we able to remember the OAR that we computed some time back? How much? 30. So this is what has been absorbed minus the actual for the period. The actual for the period was how much here? Somebody fixed production overhead? 2.1 million, Yeah. Because even to get this really is quite an easy thing. To get this, ladies and gentlemen, if I come here, I'll be able to see the actual, here. In the marginal costing statement, you can see the fixed production overhead. This is the actual or the expected. So 2.1, yeah. So you're right. So in this case here, we have 2.1. Ala. Imeanza maneno. Sasa nimekuwa mjuaji. You can't know how happy I am. Great. Yeah. So in this case here, 2.1 million. So then are you able to subtract and give me this figure? 150,000. Positive, eh? Positive. So in this case, you simply write plus 150,000. That is the adjustment because I'll be adding it back. I'll be adding it back. So remember, basically, that is an over absorption. But don't go to those interpretations. Yeah, we must know how to really simplify this life. So we go to period 2. So for period 2, do we know the number of units that we produced in the second period? How many? 65,000. And the OAR that we got, 65,000. The fixed overhead absorption rate that we got is 30,000, isn't it? Minus the actual fixed production overhead from the marginal, it is 2.2. What here, somebody? 2.1 million. Which gives us what here, somebody? Negative 150. So you come and give us a title here, adjusted, profit. Net profit, basically. So here we are adding, right? Which will give us how much here, somebody? 1150,000. How about this one here, somebody? 1250,000. Like that. And that is the end. So I don't know whether in this question they asked us to prepare a reconciliation statement. They ask us to prepare a reconciliation statement? No, but let's prepare one, isn't it? Let's prepare a reconciliation statement. In all questions, this examiner was very lenient. I don't know why. Perhaps he loved students in that semester. In most of these questions, the examiner will tell you to reconcile the marginal profit and the absorption you'll be told to reconcile. So write for us there, reconciliation statement. Before I continue again, I would want to pause a little bit and ask the online students whether we are together. The online students somehow, are we together? Of course, the online students will become the biggest beneficiary of this whiteboard. You realize that most of you are not struggling a lot with the internet now because this thing consumes very little internet. And even if my handwriting is bad, you're able to see it from the other side better. That is the good thing with this board. Great. Thank you so much. But now you are 17 and you are 21, but you shall overcome. Thank you so much. So then make there a title, call it what here, somebody reconciliation statement here. So again, even if you don't understand a lot, you write in capital letters, reconciliation statement, and then you underline reconciliation statement, and then you get to underline. Have you done that? So we shall always begin with marginal profits. So marginal profits. Siku siku moja mwanafunzi aliandika marginal hivi. Ilikuwa usingizi. Marginal profit. Marginal profit. So period 1, period 2. Period 1, period 2. Period 1, period 2. So you guys have your marginal P and L. Do you remember marginal P and L? Are you able to give me the period 1 profit? This is 700,000. 700,000. How about period 2? 1 million. 1.4 million. So then what you'll do, you'll come and give me the fixed overhead, the fixed overhead in opening stock. Fixed overhead in opening stock. Fixed overhead in opening stock. So are you able to remember our opening stock units? Akiwa amesahau. Ya kwanza ilikuwa 0, period 2 ilikuwa 15,000. Opening stocks, isn't it? Yeah. So multiply this by the fixed overhead cost, which was 30. The fixed overhead cost was 30. The fixed overhead cost was 30. So the first one is 0. The second one is what here, somebody? 450,000. 450,000. And then you come and give me the fixed overhead in what here, somebody? Closing stock. The fixed overhead in closing stock. Fixed overhead in closing stock. Fixed overhead in closing stock. So fixed overhead in closing stock. What do we have there, ladies and gentlemen? How many units? 15,000 and 10,000. And do you remember the fixed overhead per unit? The one you used for absorption, the fixed overhead absorption rate, that is what you put there. So the first one will be what here, somebody? 450,000, eh? Yeah. And then what do we have here in this case here? 300,000. Now, please listen. Whenever you're doing reconciliation, opening stock values shall always be subtracted and closing stock value shall always be added. So come and take always. I don't know how you can write this somewhere in your mother tongue, somewhere, that when you're doing reconciliations, opening stock values will always be subtracted. Subtract opening. And then you add the closing. And I'll be able to explain. So remember, ABS stands for what you absorb? Absorption profits, like that. So can you kindly do me a favor? So this will be 700,000 minus 0 plus 450,000. So 700,000 minus 0 plus 450,000. That will end up giving us what figure? 1150,000. 1150,000. And then period 2, we have 1.4 million minus 450,000 plus 300,000, which gives us 1250,000. And then now you go and look at the P&L that you did under absorption and see whether the figures are agreeing. See whether the figures that you got under absorption, profit and loss, are they the same as these ones? Are you sure? So they have reconciled. You can even get a pen and mark for yourself. You are a bright student. These have reconciled. Have they reconciled? So then please do me a favor. The question that we did, the other question that we did, are you able to prepare this reconciliation in 5 minutes? Yeah, because you have everything there. You have the stock movement units, you have the OAR, and you have the 2 profits. Let's see whether you'll be able to reconcile that, of course, with a neighbor. If you don't have a neighbor who talks to you, that is really sad. Sad. Very sad. Oh, the neighbor doesn't talk to you. No. You need to talk to her. Great. I need to see people talking. Because this thing is one term, isn't it? One term. And remember, all the awards in this paper, management accounting, normally they come from my class. Awards that is becoming number 1 in Kenya. And if you get number 1 in Kenya, I pay your entire fees, advanced level at RCM, and your CASNEB exam fees. You basically stop paying fees. I take over the case. Like my academic son or daughter, number 1 in Kenya. And it's very easy. You keep on doing the questions that we do in class. In class, you keep on repeating them. I'm not an examiner, but I know so many things. I know so many things. And that is why when I tell you to discuss, I know what I'm talking about. Because I don't want anybody to be left behind. Two objectives, the entire class must pass, and we must get an award. So the online students, I hope you are able to remember the question that we did. The online students, I hope you are able to remember the question that we did, and you're trying to do a reconciliation, because that will come this semester. That will come this semester.
So the class has been a lively one. Thank you so much for attending today's class. Goodbye.